Hi, I'm Wayne Zell. I'm an estate planning and business planning attorney. I'm discussing the basics of business planning. And now I'd like to cover how to get your business ready to sell. First, bring in corporate counsel to help you clean up your books and records. It's worth it to have a lawyer who's experienced in transactions look at your minute books. Have you held all the required stockholders meetings? Have you held all the required board of directors meetings? Next, assemble all of your contracts with all the terms and conditions of those contracts and make sure that you've got signed versions. Also, you're going to want to make sure that your stock ledger is up to date. You also want to make sure you've got complete documentation in your files of any loans, any employment agreements, human resources files, and any equity incentives, including stock options or stock appreciation rights, that you may have granted. Your buyer is going to ask for a copy of all of the non-disclosure agreements that you may have entered into as a business with any third party. Next, you're going to want to have a copy of all of your employment policies and the employment manual ready for inspection by the buyer. The second thing you're going to want to do is determine what you want for your business after taxes. So that requires that you consult with tax counsel or tax accountant to determine the most likely structure and the tax consequences of the sale. Part of that analysis is to make sure that you understand whether the gain that's recognized by the business on the sale is going to be treated as capital gain or ordinary income, which may be subject to a higher tax rate. If you've got an S corporation, watch out for the built-in gains tax. That would occur if you converted from a C corporation to an S corporation at some time in your past. You also have to make sure that you know what you're getting in exchange in the transaction. Some buyers are willing to pay cash. Some buyers are willing to pay cash and give you a note. Some buyers may offer you stock in exchange for your stock in the business. Also, you may want to consider doing some estate planning before the sale negotiations commence. Number 3, talk with an investment banker. Talk with 5 investment bankers and talk with business brokers. Find out what a business like yours might sell for. Get comfortable with somebody that you may hire as an investment banker. And look for comparable industry and business experience in the advisor that you're choosing. You definitely will want to determine whether the transaction will be large enough to warrant the involvement of an investment banker. Interview clients of these investment bankers and business brokers to make sure that you have the right fit. Also, you can use these folks to get information on the market, on timing of a transaction, and on how to structure it based on your industry and the size of your company. If you're going to hire an investment banker, have your lawyer, who is competent in negotiating merger and acquisition transactions, assist in negotiating the terms of the investment banker's agreement. It's not set in stone. Everything is negotiable. Number 4, you'll then want to assemble all of your due diligence materials and build an online data room for inspection by prospective buyers. Most competent investment bankers will assist you in assembling all these materials. Lawyers can assist in this task as well. Use due diligence lists that have been created by attorneys or investment bankers to build your data room. You may want to consider uploading your corporate documents, your contracts, and all these due diligence materials so that the buyer can gain access to look at these documents. Number 5, at the appropriate time, create a draft stock purchase agreement or an asset purchase agreement or a merger agreement in anticipation of the deal you desire to have, and shop the draft agreement to prospective buyers through your investment banker. This shows that you're serious about selling your company. It also shows the parameters of what you're willing to accept in the deal terms and conditions. And it allows you to always put the first offer forward, which in the world of negotiation is the best thing that you can possibly do. In addition, Having your due diligence done and setting forth or putting forth a purchase agreement weeds out buyers who are really not willing to negotiate on your terms. Then, after you've done all that, go find the buyers and go through an auction process if you can. An auction process basically whittles down a series of prospective buyers who may be financial buyers or strategic buyers to the smallest and most elite group, and ultimately will lead to a term sheet, a letter of intent, and a deal. So those are some tips to help you get ready to sell your business. And I'm next going to cover the concept of business succession planning.